So I'll go through these, some of these quickly, and things that you can read on your own, but some that I'd like you to learn a little bit more about. So everybody know what a financial audit is, right? Everybody know what a financial audit is, right? That's what we most learn. That's the present fairly. In our opinion, the financial statements are presented fairly in compliance with generally accepted accounting principles. And what we have is we have financial audits of organization. And if you were to look at, for instance, the audit of the CAFRs, there will be the first part is what? An opinion from the state auditor or an external accounting firm. So let me explain to you the next thing. All the audit opinions we see are given by external audit firms. For governments, something strange happens. Not only external firms, but government auditors. And you say, that doesn't sound good. How can a government auditor be independent? But under AICPA and GAO rules, if that auditor who's doing the work is independent of the executive branch, they can in fact perform the audit. I'll give you an example. New Jersey State Auditor can do the audit of the New Jersey state government because the auditor is appointed by the legislature. The audit is being done of the executive branch. The three branches of government, right? So they have different bosses and it can be done. So you'll see that difference from, from place to place. Some of them you have the external firms and some of them you have the state auditor itself. So these are the standards. Auditors are supposed to follow these generally accepted auditing standards. There are about 100 of these SAS. There are 10 standards, and these are all listed in illustration: general standards, fieldwork standards, and reporting standards. Why does any auditor have to follow these standards? Anybody know why? Well, when you go out, has anyone worked as an auditor here for any accounting firm? Okay, I guess no. Yes, you worked as an auditor? As an intern, okay. And what did you find peculiar about the auditing work? Something that you thought was just kind of unusual. They were very meticulous, right? About everything they did, right? They would take every piece, had to be, they had to verify in terms of putting their initials. They're very, very extensive. They're very meticulous, right? And that being that meticulous comes from the standards which require them to do that kind of work, okay? But let's take a look at the audit report itself. And what we're going to do is, and I want you to understand, again, emphasis, I want you to understand what each of the paragraphs include and what their purpose is in a standard audit report. And we're going to take a look at one of these quickly here, okay? What I'm going to do now is, this is an independent auditor's report for a government organization. I want you to just read the first paragraph. Notice the difference. It's not XYZ company. What does it say? It says governmental activities, right? Business type activities, component units, major funds, and the remaining funds. These are called opinion units. Each one of these, they're called opinion units. You might say, what does he mean by opinion units? What it means is that a government can have these audits done on each one of these and could get different opinions on each one of those items, which we're not used to thinking about it that way. Because you'd say, how could you get, for instance, a clean opinion on governmental activities, but a disclaimer of opinion on business type activities? Because each one of them is an opinion unit by itself. So unlike a company, which is one whole, with a government you have all these different units, and each one of them can get a different opinion. So what I'd like you to do is now read the second paragraph. So the first one was the opinion units. Second is and the first sentence is what I want you to look at. We conducted our audit in accordance with auditing standards generally accepted in the United States of America, which are the governmental auditing standards issued by the Comptroller General of the United States. So it specifically refers to the source, which in this case is what? The governmental auditing standards. That's how the audit is done. Now let's go to the third paragraph. So we have the opening, the scope paragraph. This is the scope opening paragraph. Now let's take a look at the opinion paragraph. The opinion presents fairly in all respects, and look at that. They repeat everything over again. Governmental activities, business activities. It tells you each one of this has had a clean opinion. Everybody see that? And then there are these other two paragraphs at the bottom, which talk about, we call them the explanatory paragraphs. But notice this part at the bottom. And this is just, supplementary information, fund information, statistical information, have not been subjected to the auditing procedures applied in the audit of the basic financial statements. And we express no opinion. Now this might not seem very exciting at this point, but if you ever get into the audit arena, this paragraph, this is basically what the audit is all about. So you see how it defines what they're auditing. They define the standards that are being used to audit. They express an opinion, and then they have explanatory paragraphs which tell you what they audited and what they did not audit, or what they only applied limited. See that limited procedures, we have applied limited procedures to required supplementary information. So that's your audit opinion. Those are the four parts of it. All right. Let's go back to, so if you are the CFO, which is the opinion you want? Unqualified or clean opinion, right? Qualified and adverse opinion. Why would you get a qualified opinion? Well, you'd get a qualified opinion, obviously, if you follow accounting principles which are not GAAP. However, notice what I told you about budgetary schedules. You're following non-GAAP principles, and you're required to do that and get a clean opinion. An adverse opinion is a CFO who's gone crazy, literally. Doesn't follow anything, doesn't want to give them anything. You never want to get an adverse opinion, okay? But know the difference between three of these. Yeah?
So you're following Bora, for GASB standards,
you would cite OCBOA standards. You say you're auditing as per OCBOA.
Okay.
You won't say as per GASB. It's actually a great question. If you're following other comprehensive bases of accounting, for instance, like New Jersey does, a New Jersey municipality goes out to KPMG and says, audit these. What's the opinion going to say? New Jersey doesn't follow GAAP. So the answer there is they will audit based on the accounting principles prescribed by New Jersey, not by GASB. And they're going to say that in their audit opinion, that they are not doing that. Do you see what I mean? So this is, by generally accepted accounting principles for government, we mean GASB. Okay? Yeah. Disclaimer opinion is if you don't have, records. Remember disclaimer opinion on the United States financial statements expressed by the GAO? That was a disclaimer of opinion. Now this is an interesting chart. If you're an auditor and you're doing state and local government audit, the question is, where do you go to look for accounting standards? Your answer is going to be, sure, I know. It has to be GASB. Well, that's called the hierarchy. If you ever have an accounting question, you go first to GASB statements and interpretation. If you don't find them, then you go to GASB technical bulletins. If you don't find them, you keep on going down in that order. The point is that if it's for state and local governments, you don't go to the federal government sources. You go to GASB. And you start off with what statements which are the highest in the hierarchy. And then it flows down. Everybody see that? Okay. So for instance, if there is a question and you're doing the audit and you realize you don't know if it's good or bad, you don't go to the implementation guide. First you go to the statements and interpretation to find the answer. If not, then you go down that. And that's called the GASB hierarchy. So let me ask you a question. If I were a non-profit, non-governmental entity, what would be my hierarchy be? FASB statements, right? If it's federal government, it would be FASAB statements, right? And this talks about the FASB, which is to be applied for non-governmental entity. Oops, what did I do here? Oops. Okay, materiality. Everybody know materiality? About materiality, right? Why is it important in accounting, materiality? It's all that, yeah.
So the statements are released on a timely basis. So I mean the audit opinions are released on a timely basis.
No, it has to do with materiality. It's.
I'm saying in reference to you have to set a materiality threshold. So
That's right. That's right. So you set a materiality threshold, which, and we'll look at that in a moment. And it's the same story with governments too. But what you'll find out with governments is the materiality thresholds are a lot lower. For instance, in governments, if you worked in the private sector and somebody took something, stole $500 of some stuff, or did something where the fraud was very minuscule, was very minor. In government, any instance of fraud has to be disclosed. Materiality threshold does not apply. If you find it, you have to disclose it. Okay? But materiality here is concerned more about the misstatements in the financial statements. And notice the reason why I put this in. So you have $10 million worth of assets, which are dispersed among these 5 different entities, different pieces. How would you evaluate materiality? On the entire 10 million or on each one of those items? Think about the opinion and this introductory section. What did we do for each one of those? We did what? We held them separately, right? As if they were entities on their own. So materiality is always applied individually to each of the opinion units, never together. Because if you do it together, your materiality threshold would be raised. Everybody got that? Okay? Yeah. So you base it on the opinion units rather than on the total. And RSI and MDI, MD&A are outside the scope of the financial audit, statement audit, and they're only limited procedures. You know, if you ask 9 out of 10 CPAs who are not government accountants, they'll be surprised at that statement, that RSI and MD&A are not subjected to the same level of audit. Because what is RSI? That's your required supplementary information, which has what? The budget, right? And MD&A is a very important piece. But that's something to remember here, that they only apply limited procedures to it. So it's not that the auditor doesn't read the MD&A. They read the MD&A, but they aren't concerned as much as they are with the financial statements. It doesn't mean you write anything you want in the MD&A. They'll still check it, but they won't. It's not the same level of audit procedures. Now, these are the types of audits that I want you to understand. Financial audit, most of us know what financial audits are, okay? It's about, you know, attesting to the work, but what confuses people is this attestation engagement. And these are called agreed upon procedure audits, agreed upon procedures audit. I'll give you an example. When I was at the Meadowlands, we gave out money to some of the towns surrounding the Meadowlands for different services and all that. And they got, you know, a couple of $1 million. And somebody then asked me the question, when you gave out this money, what did you base your decision on? Did you just arrive at any amount and just said, okay, you can have this, you can have this? So I said, this is the formula that we used. And they said, well, we like you to do an agreed upon procedures engagement on your grants. I hired an auditor. I told them these were the rules that I used to give grant monies to the towns. The auditor took my rules and then rechecked everything I did. And then they issued a report, and that was an attestation engagement which said whether I did it correctly or not. Do you see that? So somebody else looking at what you're doing. In this case, it could be internal controls, compliance, for instance, contract amounts, performance measure. And the last one we'll talk about in a little bit more is the performance audits, which is really one of the very important pieces. And you know, most governments should really have performance audit because this is the assessment of management's performance. It tells you how the management is doing, if they're accomplishing what they have set out to do, depending on what you're measuring. So it's all about efficiency, it's about effectiveness of what you're doing. The next part is something called the Yellow Book. These are the generally accepted government auditing standards. They're called GAGAS. And actually, I did bring my copy of the Yellow Book. This is what the auditors look at when they go out to audit an organization in the United States. And many, let me just tell you how this came about. The federal government, you know, sends a large amount of funds to various public entities. And they've decided they want auditors to comply with certain standards, very stringent standards. So this specifies how a governmental audit has to be performed and has all the standards. And if you don't follow this, you're in trouble. Okay, basically it really, and I'll talk about what these standards are. Basically what it says is that any entity which spends $500,000 or more in federal resources in any year is subject to a Yellow Book audit. Okay. By the way, this amount, and I won't hold you to this, was just raised to $750,000. So you can still say, think in your mind $500,000 for the time being, okay? And so if you receive, or your town or your nonprofit entity receives, not only governments, a nonprofit entity receives from the federal government, and you spend $500,000 or more in any 1 year, you are now subject to a Yellow Book audit. You hire an auditor and you tell them, I want a Yellow Book or a GAGAS audit done. And they'll say, why? Because of this reason, okay? And these are some of the audit standards. I'll go through these quickly. I'll point out to you some of the, because you can read about this. There's an illustration in the book which explains these. So basically what it is you have the generally accepted auditing standards, and on top you have the governmental auditing standards which add more things to it, okay? So there are general standards, independent standards. In all matters relating to audit work must be independent in mind and in appearance. Ask you a quick question. You're the partner of the audit firm. Can you be on the board of commissioners of the town? Any problem with independence? Definitely. All right. Professional judgment, must use professional judgment, obviously. Some more standards. Competence. And this is where you have to be very careful, because you want to make sure that the staff which goes out to audit is adequately trained. In fact, I think under the Yellow Book audit you're required to have 80-hour CPEs every 2 years, and there are 24 of them will go through the list, have to be in the governmental area. So you just can't take regular auditors and say, okay, go ahead, do this stuff, okay? And there's quality control, and you'll see more examples in the book about that. For instance, quality control, if you do a governmental audit, every 3 years or every 5 years, you're supposed to have another audit firm come and review your work papers, peer review, to make sure you did things right. And if you did not do them right, they have to come back in 18 months again to see if you're doing things right or not. So there's this peer review process that has to take place too. Some other things should be you have to make the information available during audit planning. The auditors should evaluate whether it has taken appropriate corrective actions. And this is interesting, because this second point is what you'll find is that at the end of some of the audits, you'll have findings and recommendations, which you don't find in commercial audits. And basically what it says is, we found this problem. This is what needs to be done. Well, next year when you go back to audit that, what's the first thing you're going to look for? Making sure that those findings and recommendations were addressed. Okay? And that's what this refers to. And there are other things, as I spoke to you about internal controls, non-compliance, fraud, or abuse. Governments have to be very, very sensitive to this. And why are governments so sensitive to this type of stuff? Because what happens if something goes wrong? Where does it end up? Where do you see the news? Well, it appears in the Star Ledger or somewhere else, as we saw in New Jersey, and something very little can really cause big problems. So governments are very highly intolerant to these cases of non-compliance, fraud, or abuse. Okay, and the auditors have really a critical role in examining that. Documentation, as someone said in the back, documentation is as important as is in the commercial sector in terms of being able to review the work. In governments, it's even more, Because in governments, you need to make sure that if somebody comes back and checks your work 3 years later and you don't have it well documented, you're in trouble because of the peer review. And we saw the reference to governmental auditing standards in the report. These are the reporting requirements now that we are looking at. Bless you. When the financial statement audit report contains an opinion, and you need to, on compliance laws and regulations and provisions of grant must be provided as part of the report. So these are, and again, I'm not spending too much time. I'm just going to go over things that seem the most interesting. If there are any areas where there are deficiencies, you need to bring that up. Okay. And this is what happens. When governments have a problem, the auditor has a problem, they'll send a letter to the CFO, or will, in their internal control letter, they'll say these are the problems. The CFO has the right to respond to that letter and say, you looked at it, but you didn't really do it right. And that response has to be presented as such. So it cannot be an unbalanced report. And it does happen. Now, this might not seem anything to you at this point, but believe me, these little things, and this only comes from experience, can mean major headaches. And for that reason, government auditors, as well as those people who work in the finance side, really need to be very, very careful in the areas of internal control and compliance issues. Now, what you'll also see is that in many cases where there are audits and where there are individuals involved, for instance, if they have an audit of Medicare, or Medicaid rather, the auditors will block out all the sensitive information so that people do not have access to it. And also, there is a statement at the end of the audit which says that this is a public document. You know about that, right? In New Jersey, we have the Open Public Records Act. I don't know if you know this. You can literally get any information you want from the government on any aspect of what they're doing just by simply sending them a letter, and they have to respond to you within 10 days. How do you think newspapers get that information? That's how they do it. By the way, the same applies to the federal government, except for confidential information, personnel-related information. You can literally get anything. And obviously that means distribution of audit reports. So unique aspects of GAGAS places much more emphasis on compliance with laws and regulations. Okay. That's you. Now this is the competence standards. Remember I talked to you about 80 CPs for every 2 years? This is to make sure that folks who are auditing have enough training to do the work. Okay, as you can see, 24 hours must be related to governmental auditing or the unique environment. This is different from the current CPA requirements for the state of New Jersey. As a CPA, we are required to complete 120 hours every 3 years. The only requirement there is that we must do, I think, 4 hours of ethics and law, which is required every 3 years. You cannot, and then depending on what you're working on, if you're doing work in the audit area, there's a requirement as to the number of hours required for audit. But I have to tell you this, and it's kind of interesting because, the New Jersey State Board of Accountancy is right here, right in Newark. It's actually a couple of blocks away from here on Halsey Street. And I'm telling you this because when you get your CPAs, never ever take the CPA requirements lightly. Give you an example. The person, when you renew a license, you have to tell them if you satisfied it or not. Yes or no? Answered yes. They picked him for audit. They said, show us how you did your CPEs. He says, well, I don't remember the rest. They said, well, we need the proof. And this is the Attorney General's office. Person got fined $10,000 for a CPE violation. Another interesting thing, not that, is if you were to take a college course, you get CPE hours, up to 45 hours. If I teach the class, I don't get any. Because that's what? It's part of what I normally do. If I taught it part-time, I would get it. So there are all these little nuances with CPE credits. And my point is, and I know you're not there yet, but whenever you decide to take CPEs, just make sure that you take it with someone who's registered with the state of New Jersey. So, if you take a CPE course with someone who's not, you could be in trouble. Okay? Independence standards, and again, I'll go through some of these. Actually, we'll go, what I want to do is talk about this threat to independence. In governments, this is a very important area about threats and threats to independence and how they're dealt with. And let me give you an example. You are an audit firm, you're hired by the government, and they say, you know what, can you design our accounting system for us? What would your response be? What do you think? Would you tell them, yes, you give me $1 million, I'll do that for you? Can you do that if you're still the auditor? Designing a system, an accounting system. Or better still, can you know what? This governmental stuff's too complicated. Can you prepare the trial balance for me? Can you do that? All right, better still, I've got a great person for the accountant's job in your organization. Here's the name of the person, here's a resume. This is from the auditor. Do you want to hire him? No. Threats to independence, and these are things you have to be very careful. Now, there are some things which are kind of in a shady area. We don't know if they're right or if they're wrong. But that's what this says, that if there is ever an issue, you should document the threat identified and the safeguards applied to eliminate the threat. Give you an example. The partner of the audit firm, his relative, works as the CFO for the public entity. The partner who's doing the audit, his relative, close relative, works as the CFO for the public sector organization. Now what do? You say, geez, what do I do now? Well, what can the partner do? First of all, he or she identifies the threat. Then what do? They say, you know what I'm going to do? Because I have my relative as a CFO, what I'm going to do is I am not going to review the audit work. I'm going to have this other partner do the work, do all the review work. So that's how I've handled the issue of eliminating or reducing it to an acceptable level. So these are examples, practical examples of what happens in the real world. These are non-audit services. As you know, and again, for those of you who will go out to the big accounting firms, most of them make a lot of money from consulting. And consulting and auditing with the same client sometimes doesn't mix too well. You have to be very careful. And that's non-audit work. To be very careful the type of work, and this is required under GAGAS, under Generally Accepted Governmental Auditing Standards, this book specifies the type of work that you can or you cannot do. So here's an example. Information technology system work, things that you cannot do. Design or develop a financial or other IT system that plays a significant role in the management of an area of operations. Operate or supervise the operation of such a system. So these are, as I said, these are some of the examples that are shown. So you'll see more examples in the book of those. But independent standards, as I said, you need to identify them, and you need to be able to make sure that those are standards which do not in any way, those threats, those independence issues do not cause a problem. Now let's go to, and I'm moving across this because I want to get to the more important part here, which is single audit. Let me explain to you this. In the past, many, many years ago, you know, all organizations do an audit, are required to have an audit. State regulations, state rules, whatever. The federal government also requires an audit. So what do? You have a state audit done and then you hire somebody to do the federal audit? Well, somebody said, what a terrible waste of money and resources. Why don't we have one audit known as a single audit, which does what? Audit the state's operation as well as any federal monies that they might have received. Again, I'll give you an example. You've just received $500,000 worth of funding for Hurricane Sandy in your town from the federal government, or $600,000. If you're the CFO, you say, uh-oh, sounds like single audit is coming down this way. But there are a couple of questions you have to answer first. The way single audits work is you have to spend at least $500,000 during any 1 year. $500,000 during any 1 year. As they would call it, it has to be at risk. Okay? And what single audit does is, it instead of doing a grant by grant audit, you do an entity-wide audit itself. Okay? How is this different from a GAGAS audit? Okay, so we had the generally accepted auditing standards, then we had the government auditing standards. Now there's a third layer on top, which is the single audit requirement. So there is another layer on top of the GAGAS, more requirements of what needs to be done. So you have these three layers. The first, which corporations follow, the second one, which all governments follow, and then the third one, which is a single audit where you need to, if you receive $500,000 or more. And as I said, these are the, and notice it's just not state and local government, it's also what? Not-for-profit organizations, including colleges and hospitals. Could those be non-governmental? Yes, it doesn't matter. Government or non-governmental not-profits, single audit still applies. So this is what happens. In the past, what happened was, if you are a large, if you're the state of New Jersey and you receive millions of dollars of monies from the federal government for program, this program, that program, what they used to do was hire an auditor to audit each program. Terrible waste of money. So instead of doing it as a program on a single program basis, now you have what? A single audit itself. Okay. And this was a single audit which actually came much earlier, 1996. There were some things that were done to expand. The important words here are risk-based approach for audit testing. Those are the important words. Let me give you, and I'll try to make this simple because when you look at this in the book, it seems a little like rocket science. It's not. What does risk-based approach mean? You don't even have to know anything about auditing. You audit the programs which you think carry the greatest risk. Audit the programs which carry the greatest risk. If there were two programs, one was a very large program and one was a small program, and they had the same risk level, which one would you audit first? The large one, right? So what do you want to do? You want to identify high risk, large programs. And you want to identify what? High risk, low amount programs, right? You want to catch all the high risk. That's what this this risk-based approach is all about. And then there are rules, and we'll talk about this. What's this A133? You'll see this all the time. If you ever want to impress a government auditor and you don't know anything about government auditing, just tell them, I'm familiar with A133. And they'll say, gosh, how did he or she know about this? Because let me explain this to you. GAGAS, which is the Governmental Auditing Standards, they are basically what standards? They have to be specific guidelines. And that's issued by the Office of Management and Budget. And those guidelines, those specific guidelines, are in A133. So one are the standards, the other are the guidelines. And the guidelines are under A133. Believe me, there is money to be made in government auditing. You might not think so. Do you know who does a single audit for the state of New Jersey? Yeah. Were you New Jersey?
No.
Okay.
My research though.
Okay. All right. Amount of federal awards. There's an illustration 11.8, but basically it's what is at risk. What did you spend during the year? That's how you determine $500,000. Single audit requirements must be conducted by an independent auditor. You have to follow the Yellow Book standards. And these, you know, it's the one part that's interesting is the schedule of expenditures of federal award. So now visualize the audit report for a moment. And it doesn't happen, unfortunately, for New Jersey because you have the audit report, and in the back for each program, federal program, you have a schedule of expenditures which shows how much you spent on that grant. And that's what that is. Auditor must obtain an understanding of internal controls. We talked about that. And I'll talk about the responsibilities in a moment. So we basically what we do is we take a look at, we take all the federal grants which we have and divide them into two piles, Type A programs and Type B programs. You want to pick Type A programs which have the highest risk. And the way the book goes about telling you is that identify the low risk, because if you identify the low risk, then you'll know which ones are the high risk. Okay? And basically the way you do that is if there are no audit findings or there's nothing bad about, so for instance, you have a grant for $1 million, which was audited last year. And it was a big grant. And you know what? Everything was good. It's now classified as what? Low risk, because what did you have? Did you have any audit finding? No. You see that? So you go and pick something else. And this is what they talk about. All right? And again, Type B programs are those which are not Type A. So the question is, what are the dollar thresholds? Now, let me explain this to you. And please don't get confused with the amounts themselves, because it's really not that. For our purposes, 3% of your total federal amount that you receive is the trigger point to establish whether it's a Type A or Type B program. Let me give you an example. You receive $10 million. You have two grants, one for $3.5 million and one for $2.5 million. Which one is Type A? no, I'm sorry, $100 million. You have $100 million and you received $100 million in grant monies from the federal government. You have one grant for $3 million, $3.5 million, the other one for $2.5 million. The cutoff was what? 3%. If it's over 3%, it becomes what? A type A program. And that's what this is. It's using that threshold, and you'll see that. But what you have to do is, in all cases, you have to audit at least 50% of all the programs. So if you got $100 million, you must audit $50 million, regardless. Type A, type B, doesn't matter. It only matters if it's more than 50%, because then you have to reduce it to the number that you want it to be here, at 50.
What if you don't spend?
The what?
What if you don't spend 50%?
What if you don't spend 50%? You're only doing it based on what's being spent. I think your question is a little different. The question is, what would happen if for some reason you were able to spend less than $500,000 each year? Is that your question? Yes. And you know what? In that case, you would not be subjected to it. Even though you've received what? More than 5, because it's over different years. It's kind of a strange thing, but that's how it works. But for most states, $500,000 is a very small amount in terms of what they would get from government, from the federal government. It's in millions and millions. So, and that's why they actually raised it to $750, because the amounts are so much larger than that. But do you see that? Yeah. So once again, because this is an important part of the single audit, what approach does it use to audit, single audit use? Risk-based approach. How does it do that? By taking all the programs that are funded by the federal government and dividing them into two buckets, type A and type B. How do you know what to select? Well, you use the 3% rule. If it's 3% or more, it becomes what? Type A program. And then you do what? You also look at the history. Was this program, did it have any trouble in the past? If it didn't, you can pass that for another high-risk program. So basically, the rule is even simpler. You basically audit all high-risk programs. Doesn't matter, type A or type B, you want to go for the high risks. And then you begin to eliminate them down. Now, I have given you, this was one of the assignment questions assigned for this week. By the way, there's no assignment for this week. I'm going to give you so you can prepare for the exam. I'm going to go through the solutions now, and I'm going to post them so you don't have to do that. Instead, use the time to study for the exam itself. But that is one of the questions that's there which calculates that, and you'll see how it does it. Okay. So auditor and auditee have responsibilities for the reporting package that must be filed and sent electronically. And another piece to think about here, and I don't know if there's a slide here. You thought governmental auditing was complicated. How about if I told you the OMB and GAO did a study to see the audits, the single audits that were submitted to the federal government, how good were they? They did a quality control review. Guess what the result was? These are government auditors who are supposed to have read the yellow book, were supposed to be trained, can pick major and type A and type B programs in their sleep. Guess what? Yeah.
I think the textbook said it was 60% has to be deficient.
Yeah. As he said, 60% of the audits were deficient. See the problem? 60% of the audits filed were deficient in some way, and 40% carried a high level of deficiency. So it just tells you that, and that's what they're trying to do, is really improve the compliance and being able to, and that's because what are they doing? They're just taking auditors who are doing commercial stuff and saying, you know what, read this book over the weekend and go and do that audit. And it doesn't work that way. But it's really not even the staff. It comes down to the partner level, is that the partners are the ones who are supposed to review this. As I said, KPMG has a very big practice. Deloitte has a big practice in the government area. In fact, the partner, Jane Letts, who is in charge of New Jersey, is on our board of advisors, and is a terrific person, and they, it's amazing, they do the entire state of New Jersey. I can't imagine a firm spending the time and the resources required to do a single audit of the entire state itself. But KPMG is very big in this area. And as I said to you, one of the important areas in single audits is the this thing called the schedule of findings and question costs. So what you have is your financial audit, and at the end of the financial audit, you have schedule of findings and question costs, a schedule of expenditures, and then what they found which was not proper. Could be internal control issues, it could be non-compliance issues, not meeting the term of the grants. So don't think of single audit as a financial audit. It really looks at the terms of the grant that you got and checks to see if you complied with those terms. So, and that's what we talk about, findings and question costs, and if things are really bad, the federal government can ask you to refund the money back to them. Okay. So one of the questions is, who monitors all this? Think about 50 states, all these countless entities. Well, this is where the next topic comes in. But, okay, before I do this, question cost involves an instance. Look at the low threshold. Cost greater than 10,000 or great must be reported in schedule of findings and question costs. This is the next thing, the last topic here, which is the role of the Cognizant Agencies. And again, this might sound so hazy and boring, but let me just explain this one last item, which is, if you are the CFO for a government organization and you have a single audit done, and there are questions on what the standards are, what the guidelines are, you need to go to someone to ask those questions. What the federal government has done has come up with a very simple rule. They have said that if you receive or you spend more than $50 million during a single year, you're assigned an oversight agency. We call that a Cognizant Agency. Okay? And they are the ones you go to, and they are the ones who will make sure that you're doing things properly. And usually it's the agency which provides you the most money. They're automatically given that responsibility. So if state of New Jersey receives the largest amount it receives is from the Health and Human Services, $1 billion. The Cognizant Agency would be Health and Human Services. Why? Because they are the ones which provided the largest amount of funding to the state, and they become your audit partners. They are the ones who are going to check to make sure you're doing things correctly. They will meet with you, okay? They provide technical advice and all of this. And then we have other oversight agencies, which is that if you are a smaller entity which receives or spends less than $50 million, then it's called an oversight agency rather than a cognizant, and they basically have the same issues. So that's kind of the way things operate. So one more thing. Oh, by the way, this was the number. Yeah, I was looking at. Look at this number. Actually, I exaggerated a bit. It was 50%. 35% were of unacceptable quality. Interesting note. Why? Because I would tell you Rutgers is probably the only school which has a lecture on governmental auditing in this class. Because what's the title of this class? Governmental Accounting and Nonprofit Accounting. Is the word auditing anywhere there? No. I chose to put this in because I know at least some of you might end up, and you'll probably go back and remember and say, you know what, he showed me the yellow book. Okay? So let me go and check that yellow book out. And by that time, it'll probably be twice as thick as this. Okay? But, and you know, I was debating whether to even put this topic in this class but I thought because, as I said, some of you might go into this area. Sarbanes-Oxley Act. And let me just go over this. You know about this, right? SOX? Okay. Those requirements, New Jersey has adopted many of those requirements. For instance, public sector organizations have to have an audit committee. A member of the audit committee has to be an accountant or some expert. So, you know, if there's a public entity out there and you'll seldom find a CPA on their board, you can volunteer and say, you know what, I could be your outside expert as a member of your audit committee. And you know what, they'd love to have you because that's what the requirement is now for audit committees. Okay. One of the other things is that besides the audit committee, let me give you the other ones which are not listed, is that CFO and CEO are required to sign the financial statements. Why? Gives them the sense that they better not lie, because if they lie, it's a misdemeanor and you can go to jail. Second item. Okay. Third item, there is a whistleblower provision that you have to allow people in the organization, if they see instance of fraud or misdoing, they should be able to report that without any consequences. So the whistleblower's protection. So these are the types of things which are now being introduced in the public sector, which were, you know, in the for-profit arena for a long time itself. So let's quickly now review. I think let's quickly just review what we just talked about. First, governmental auditing is not like commercial auditing. Why? Because governmental auditing does not just emphasize the accuracy of the financial statements, but it does what also? Compliance with laws and regulations. Right? Secondly, governmental auditing is not just generally accepted auditing standards, but it's also GAGAS or governmental auditing standards which are on top of that. Okay. Thirdly, you need to know what those additional standards are. And there are the three general standards and the reporting standards. You saw those different types of standards. Independence and materiality are important considerations. Then I talked about the single audit. Single audit is done to make the audit process efficient. So instead of doing an audit by program, you now have an audit which is carried out on an entity-wide basis. The trigger is what? $500,000 or more being spent, right? As an auditor, you use a risk-based approach, which takes all the programs you have and divide them into two, type A and type B, but you always pick the high-risk programs. In all cases, it has to be at least what? 50%. There is, I didn't tell you this earlier, there is a provision that if you are considered a low-risk auditee, if you're considered a low-risk auditee, that 50% can go down to 25%. And you see that mentioned. I'm sorry I didn't mention that to you before. So if you're a low-risk auditee, you only need to do 25% of that. Okay, so that's kind of this topic. Let's do one thing, because I just want to make sure you get this topic down. It won't take us that long. I just want to go through a couple of multiple choice questions. Any questions on this, by the way? All right, let's just take a quick look at these questions for a moment. And so a little bit about the exam. We'll have 50 multiple choice questions. Okay. I didn't want somebody to take that at face value, okay? So we'll have 50 multiple choice questions. I have them drawn equally from the 5 chapters. Okay. I just did the test, okay? So I have them drawn from the 5, no journal entry questions. Okay? No journal entry questions. What is the exam on? Concepts. Knowing, for instance, the last thing which I'm not going to give you the question, but for instance, single audit. Why do governments do single audit? What's the purpose? What does it do? It brings efficiency into the process. So conceptual questions like that, okay? And yes, it's like maybe a couple of addition and subtractions, not, 2 numbers subtracting one from the other. That's it. But I will have calculators here for those of you. No, there are not a lot of. There are less than 5 questions like that, if there were. Yes? No journal entries for this question. If it shows up, come up and ask me. Okay? I don't think so. Hold on one second. Yeah, I made up a little checklist for myself just to make sure it was reasonable.
Just the test?
Yeah, that's my list of topics in there. Okay, nothing that I see. The what? No, those are the real questions themselves. Okay. Yeah. Actually, I will send it to you right after the semester's over. No, I'm just kidding. No, I actually did it individually. I wanted to make sure they were broad-based. But we'll talk about it, okay? All right, so so you got that. The exam is going to be held in Bove Auditorium, room 220. So we have a little bit more room there, okay? And it will start promptly at 1. As I said, we'll use the same format, okay? And what other things did I miss? 50 questions. I told you about concepts equally drawn from each of the chapters. Okay, let's just quickly take a look at, if I think of anything else, take a look at the first question. This is the hierarchy question. No, you don't have to use the clickers for this. We're just going to go through. Okay. So, and this is kind of a review. As you review the text, you'll see that there are basically, who issues the generally accepted auditing standards? Who's responsible for that? FASB does the standards, right? So AICPA is involved with what? With the auditing standards themselves. So the answer, actually that first question wasn't on our hierarchy. It's in the book, but wasn't on that slide. The first answer is Part D, but let's take a look at question 2, which is more something that we covered. The answer to the first question is D, as in dog. 2, an adverse opinion. What do you think that is? How many say B or D? Remember, I'm not asking about qualified opinion, I'm asking for adverse opinion. Remember when I said the CP has gone crazy, the CFO has gone crazy? Okay. The answer really there is D. The government issues inaccurate financial statements. Number 3, which of the following is true statement about the relationship between GAGAS and GAAS? And the correct answer is B. They encompass and supplements, it adds to these standards. Let's take a look at one of my favorite questions. Goal of a performance audit is to do what? Number 5. Actually, you know what? All of them sound good. So the answer is D. And now the question 6. What do you think that is? Materiality is determined at what level? The answer is A, at the opinion level. Yes, 5 was D. D, yes. 4 was C. Did I miss C? Oh, I did miss 4. Okay, C. All right, you can take, as I said, you know what, we need to keep on moving here. So what we're going to do is, what do you think we should do? Take a break now or start off with the presentation? Short break. 5-minute break. Okay, but please come back and then we'll get started.